Hello and welcome to an update on the NDX chart. Haven't done this for a while, but overall not much change. But what we want to do here together is adjust Fibonacci support for the next potential pullback, and we want to talk about the structure. Overall, we do have, like many other charts and indices, the situation in which the pullback from the February low into the from the February high into the April low was a three-wave move. So it's a corrective pullback, which can lead to another rally to new highs. It found support. This can be classed as a fourth wave correction in a larger uptrend in a fifth wave here. What I'm unsure about is whether this fifth wave is a five-wave pattern or an ABC structure. So on the futures chart, which I'm tracking in parallel, for example, I'm tracking this as an ABC structure because this fifth wave would be seen as a part of an ending diagonal. On the NDX chart, I can make the case for an impulse, in which then, however, we get a five-wave move as a diagonal. So basically this here would be an impulse, this fifth wave, That's why this fifth wave needs to be a five-wave move, 1, 2, 3, 4, 5. Again, on the futures chart, it would be an ABC. Don't want to get too much into this, but it's just after this high, we need to be extremely careful. That 4, 5, in my view, would be a bonus. Overall, the uptrend, in my view, is still intact. We have reached a point, though, where on the long-term chart, bigger picture, larger time frame, we are coming very, very close to the end of a large rally. Zooming out further, I mean, we talked about it before. This entire move up, I'm talking about 5 waves, which represents an entire Elliott Wave cycle. Even here from the 2002 lows can be classed as complete or nearly complete. Okay, this was the nice rally here between 2009 and 2021, where it was fairly easy, I think, to be involved in the markets. Now, whenever we're dealing with a fifth wave, it's getting extremely difficult. It's getting messy. It's too early to say that we've topped, and again, I still prefer higher prices. For now, the move up from the April low is a three-wave pattern. So we need to be cautious. It is even possible, but I would treat this only as an alternative scenario for now, that a major market top, and I'm talking about really a multi-decade top, has formed already. That would be the white scenario. It would be impossible to confirm at this point. In this case, a top formed here in February 25, but we only have 3 waves down and we held support. So it's just a potential right now. And as long as the trend is still up overall, I prefer higher prices. Now, the first indication that something is really breaking and something more bearish is playing out, maybe a major top has formed. First indication would be a break below the 78.6 retrace level, 17,600, from the rally that started in April and is actually still unfolding. And so this is a support area here for a B wave pullback or a wave 2 pullback, which can lead to higher prices. But we will first of all need some kind of a price top. Then we can really confirm this support area. At the moment, it's a moving support area that moves higher with the price. So as we still climb higher, this support area will have to be adjusted, with the price. So if we zoom in a little bit, it's important to recognize that we do not yet have a top confirmation, but the move up is technically, you could say, complete. But just because a move up is technically complete, and let's say the wave count looks complete, the structure looks complete, it doesn't mean we have actually a top. That would require evidence, for example, through a break below a previous swing low. And we would need a break, for example, I think first indication that some kind of a more substantial top has formed would be a break here below the end of May low that formed at around 21,030. Better evidence, a break below 20,780. For now, this move up here is getting extremely choppy, messy, and starts to look a little bit like a wedge pattern. These tend to break to the downside because they indicate a weakening in momentum. Now, this is something that we don't necessarily see on the futures chart, but here on the NDX chart, we see it quite well. So be ready for a potential move down. These can often end quite quickly. Yeah. Looking at the microstructure, I mean, again, in each of these wave counts, whether it's the B wave top, which would result to a breakdown, or the A wave, which leads just to a corrective pullback, all of these have the same microstructure. So we have an A wave, we have a B wave, and a C wave up, which can be classed 1, 2, 3, 4, and then potentially this is just a fifth wave in an ending diagonal. And this fifth, and you know, when a diagonal pattern forms a top, typically the reversal is very sharp. It typically is very sharp. So be ready for that. I would say, therefore, it's time to be cautious, not bearish, because we're still printing higher highs and higher lows. But you see how the structure has changed, just the market structure, from this rally between the 21st of April and the 16th of May. You could say a 3-wave rally, 4-week rally. And this move up here, which is much more messy and choppy. Very interesting to identify here the difference in structures. It means the local uptrend is still unfolding. Pay attention to the wedge pattern. I would say a break below the trend line could start the decline quite quickly. And I'm not talking about the beginning of a bear market, but it could be a multi-week correction that could send us into this support zone here. Guess there will be a lot of fear in that correction, which would be normal, especially if a diagonal pattern forms a top. The move down can be very, very fast. So just be ready for it. Not calling for it yet, but I'm calling for people to be ready, because you know, we are in an ABC structure and the C wave has reached ideal targets. It's the blue zone. Clearly, the wave count wasn't complete at the 100% extension level here, but yeah, we're grinding higher. Normally, we say this area is where we should watch for a completion of a C wave. Obviously, we're using Fibonacci levels on the micro degree as well, and wave counts, but it's full. Yeah, it might get a few more upside squiggles. Pay attention to 22,520, but this is also here an area of resistance where we have these previous swing highs, the December high and the February high around 22,150, 170 as additional resistance. So yeah, that's the update on the NDX. Hope it helps. Thanks so much. Bye-bye.